Hi, this is Randy Finney with Right Side of the Chart, and this is video number 2 for November 1st, 2024. It's 10:39 p.m. Eastern Time as I'm starting the video. Just want to do one more. I'll start out here. Somebody asked me my thoughts on Boeing. Mentioned it's at support. There's some minor support on it. If you look at these couple reaction highs back here, this is the daily chart, of course. You had some reactions there, one there. So it's what I would call minor support. But what stands out to me more so is this. I've had this on here for a little while here. I guess I created that back about a week ago, 1025. And it's a downtrend line with positive divergence below. And that gives you what we call a bullish falling wedge pattern, one of my favorites. And so that's it. So Boeing simply will trigger a buy signal and a breakout above that. And I'll have to sharpen my pencil on, but these are the levels I've had here for a while, and they're still, these three all still potential targets up to about 196.41. These are older levels, so we'll see if it breaks out. And of course, if it breaks out and how far it goes will largely, but not exclusively, depend on what the stock market does. I'm going to give you one more level I see right here. Definitely worth noting. Got a candlestick close, the body right there. Several candles there, some there and right there. So, that you can call that a BOD or benefit of the doubt or first resistance level, whatever you want. Anyways, just want to share that one with you. Now, here's what I want to do in this video. I know the comments have been light lately, and I get it. The market's just kind of, grinding around. As I've talked about, we've gone absolutely, nowhere in the, most of the growth stocks. The tech-heavy NASDAQ 100 is trading now at the same level it was back 4.6 months ago. So since then, we've had some good swing trades on it, but an investor, has gone nowhere. You went down 17%, back up, not all the way. And again, we're right back where we were, 4.5 months ago. But here's what I'm going to do in this video if you are interested. So, in the last video, I explained how we have a lot of the most important stocks. First of all, the NASDAQ 100 and the SPY breaking down. Some other market-leading stocks, a couple of them, the big ones, of course, Microsoft, Apple breaking down, and a few more needed. So as I said and maintain, I think we're at a potentially critical point in the market, technically, where it won't take much to really trigger, if we get the rest of those sell signals, what could be, and I expect to be a quick rush for the exits. Remember, when VIX, I covered the VIX in the last video, volatility has been relatively low, but yet the VIX has been ticking up. So that's also a sign in itself right there. Kind of just a little bit of a heads up, a little, maybe be aware. I'm going to pull that back up. I covered the VIX earlier. But this is poised to pop. I covered how we had this ascending triangle pattern, really resistance right here, and the VIX could let loose. And I do these videos, guys, because I've been doing this a long time. I'm sharing with you, right or wrong, what I've experienced in the past, lessons I've learned, and I think we could be at the precipice of a quick swoon down, something like we had, which the media called a market crash. And I was actually told you that before that happened, back when the market peaked in July, that the risks were elevated for a market type crash or a quick swoon down because of my customized Hindenburg NASDAQ Omen indicator firing several times. My low volume indicator, which I've covered again, and if you're new to the site, that's just right here. It's something I created many, many years ago and shared many times on this site. And I have lines, and this red line is an extreme level. And in the last couple of years, really since COVID, if we take it back, we had the COVID correction, then the ensuing Fed and fiscal and monetary stimulus-induced bull run. But then you get these drops here and down to that level, and they usually precede the big drops in the market. And the last one we had was right here, and that was preceded. That was the initial shot across the bow. You get down to this level. It's not a timing indicator, but very usually relatively shortly after the big drop follows. And again, I've highlighted it here, and that's QQQ. SPY, it's even worse. Talked about that, where we hit the. This is a level. This yellow line has done the trick in recent years to get down there right there. That was right before the big drop, when the market peaked in the beginning of 2022 down into the October lows. That was the last time we hit this level here. Then we hit it here. We had that biggest, again, one of, if not the biggest correction in years. And now we're at unseen levels, which again, if you study technical analysis and, volume, stock rising on abnormally low volume is a sign of non-confirmation. It's going up on fumes for various reasons. It can be. It doesn't matter. It's just it's not a healthy advance, and so that's that. So let me go back to here's what we're going to cover in this video. I'm just going to dive right in. Okay, there's a lot of sectors out there I've been covering and watching and sharing. It's trade ideas, long, short. But one I keep coming back to because it's one of the big ones are the financials. XLF is the second largest sector, I believe, still in the S&P 500. It's only half of what the weighting of the tech sector has. However, that's still a big weighting. It's 12.5% or so as of so did that the European style. I guess I did it on. No, wait, when did I do that? 1219. I must have just typoed 919, 912. Either way, I'll fix that. That's recently I updated it. Okay, so here's what I've been talking about for a while. We've had these series of divergences building in the financials. And again, it's not as if each one hasn't played out for correction, which it certainly did. We've had trade ideas on some of those drops there. And this is the level to watch now. So here is the common theme. And if you want to watch this video, great. But I'm going to show you what I'm going to do. I'm going to go through about the top 36 or so components of XLF. I do that by looking at the component list over here. They're weighted by market capitalization, with JP Morgan being by far the biggest at $638 billion, and then Visa, MasterCard, Bank of America, so forth, so on. So I'll go through the charts relatively quickly, but here is the takeaway from this video. Just like the tech sector, which is by far the most important in those big market-leading tech stocks, and the NASDAQ 100 are pending and very close to triggering some additional. We already have some sell signals, but again, it's collectively, we need to see the majority breakdown. I can make the same case, and I'm going to do that for you right now in the financials. So what I do with this and what I'd suggest if you want to either trade the financials directly as a sector. XLF is the ETF. There's inverse ones out there. SKF 2 times inverse. FAZ 3 time inverse. You can do what you want with it. There's individual regional bank ETFs. So you can get granular. There's a subsectors of the financials, but I'm just going to cover the components here, and it's going to give you a kind of a broad view because you'll see banks, credit card companies, and insurance companies. I've got quite a few. I've had some sell signals or trendline alerts trigger on some of the life insurance companies just recently, at least one today, and I'm going to get into those. So here we go. So again, the takeaway is if you have both the financials, and again, it's collectively the majority of these I'm going to cover right now, the levels to watch. Some have already broken down, some haven't. The more that break down, the greater the chance you're going to see the stock market go down. More so, a lot of these are right on the line, ready to go, and so therefore it could be pretty quick. That's how it works. I'm not the only one that watches these levels. There's institutional traders, individual investors, there's stop loss orders set above there. So if you replicate these lines, and all of a sudden, let's just say I leave town next week, or I've got to be out, and it happens then. If you have the price alert set, because I can't, if I'm not around, can't get it out to you. I usually am. I'm in front of my desk every day, unless I have, I'm on vacation or something, which is rare. You're going to get those price alerts, and when they start going off like popcorn, you hear those alarms going off, the alerts are popping up on your screen one after another, or at least let's say in close proximity. Like in the last couple of days, I had several go off on Apple, Microsoft, the QQQ, but you start getting that on the financials, and then that's a time you may want to either add to or initiate short positions there or on the indexes. In other words, it's only going to help support the case to short the broad market. All right, let's look at the levels and then let you decide how you want to do it. So there's XLF right there. There's our current uptrend line. It comes off that big August 5th low right there. And this is just, again, a series of divergences have been building now for quite a while. You can go all the way on the weekly chart when you see long-standing divergences like you have now. You can see back here, this is exactly what we had leading up to COVID. COVID, I always say, it will go down in history as a black swan event, but it was fully priced into the stock market. The same kind of setup now. Big divergences. We had a trend line there in the financials. We had a divergent high 1, big correction, well into the double digits. Pushed up, made a marginal new, but still divergent high, and then came COVID, and that was a drop of, in XLF, a drop of about 46%. So you would have almost doubled your money if you had taken, the sell signal. And it was a clean sell signal. That's, like I said, this is a very clean and clear chart. This is what we would have been looking at and were back then. So COVID just accelerated those short trades. And now we've come full circle. The same thing. We had a comparable, just like this initial uptrend line, divergent high, sell signal. We shorted the financials there. It went down, and it ended with a divergent low, and at support, big support zone. We hit it several times, and we rallied off there. Simply extended the divergence. So we had the relatively small divergence back there, much larger divergence now, indicating a much larger drop, and I think we'll come down all the way to this primary secular bull market uptrend line when that happens. If that plays out, depending if and when we hit it, it comes in right around a 45% drop, which is about what I'm calling for in the stock market over the next year or so. All right, now we're going to go through the individual components. I'll just stick to the daily time frame because I have a lot to cover. If I start jumping around to 60-minute charts and weekly charts, it'll take forever. This is how I just want to cover XLF on the 60-minute chart right here. So it's starting to crack, and when you look at it on the 60-minute chart, it has broken down and back tested. I need to make that clear. But to be safe, it's been a resilient market. Let's just give it the benefit of the doubt. Let's take that trend line right here, and let me see if I've got it nice and tight on the bottom there. Yeah, either way I cut it, this is the best fit. We're below it. So what I did, I just tightened up my trend line to come in the bottom of that August 5th candle, catch the bottom of these two candles. We had a breakdown yesterday, and today we're back testing. It's not really any impulsive follow through yet. All right, now I'll rifle through the components and show you what needs to happen. JP Morgan, the 800-pound gorilla in the sector, it's holding up there. It's in this little sideways consolidation period, so really a break below there should take us to the trend line, but nothing big happens till this trend line goes. So I believe I already have a price alert. Oh, I didn't mean to create a parallel trend line. Delete that. Meant to click on set alert. Either way, it can't hurt to have too many alerts, but that's it. So that's a big trend line. It comes off the November 2023 lows. You want to replicate that. Come in, catch that candle from the August 5th lows and these more recent candles. That's a big one. Plus, if that happens, then we're going to fall back below that support level there. All right, next up, second largest would be Visa. Visa right there. This was a recent trade idea. We broke down there. We hit my first price target, bounced, made a marginal new and slightly high, but still divergent high. So this was a divergent high, and the line was right here. I just had to move it a little bit. So that was DH1 really. And this is simply an extension, a marginal ever so slightly higher high. I believe that was an earnings pop, and so far fading it too. This is the trend line that needs to break. Once that breaks, it should open the door to the next targets I have, T2, 3, 4. So replicate that trend line. Visa's comfortably above it now, but when I say comfortably, it's a bad day away. Bad day, it's only less than 3% above that trend line. So remember, things can happen quick once the market does turn. MasterCard, also shared that one, gave you a couple targets. But look at this, like it and even better, liking it better right now. Massive bearish engulfing candle yesterday. This candle wipes out. When you look at a bearish engulfing, you want to see the body of that candle wipe out the entire candle, or the body. I like to use the body, wiping out the body of the previous candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, previous 13 candles engulfed. That's powerful stuff. And we also, at that same time, took out this trend line, broke and closed below the uptrend line right there, that benefit of the doubt trend line. So these are easy trading. It's an easy trade when you see a bearish engulfing because they're potential topping sticks. You just short with a stop above the top of the bearish engulfing, and that's it. And so if you do that today, we're bounce back a little bit today, but we're still well below the top of that candle. It gives you give yourself about a 3.5 to the top of it. So let's say you give yourself just say a 4% stop loss. That third target down here is 17, almost 18%. So that's an excellent risk reward ratio. And I do think there will probably be more, because if that happens, if we get to T3, the only way we're getting there is by taking out this primary uptrend line. So this gives us a big old wedge right there. Your measured target alone would take you down here probably somewhere. So either way, that one is on a sell signal. It's an objective short now. As I like to say, if you want to give yourself better odds, you can wait till the majority of these break down. And again, even if you don't care to trade the financials or short them, you should keep an eye on these charts that I'm going over right now. This is Bank of America. I'm going to add a trend line here, BAC. It's kind of been whippy, but peaked already back here on that divergent high, and so it needs to break this trend line. Berkshire, beautiful uptrend line off the October 2023 lows. It's above it now, plus price support. This is a nice support zone. Big sell signal if and when Berkshire breaks that level, and we're not far from it. Remember, it already broke down like so many financials, put in a divergent high, very clean uptrend line break on what was probably a buying climax there. And so there it is. So you need to see that one break. That'll be a sell signal. Wells Fargo, big divergent high. Let's see if I can, I can give a trend line here. Something along these lines. Break of that would be bearish. American Express put in a divergent high recently, big divergent high. It's got a potential head and shoulders topping pattern, and that would be your neckline. So a break of 266.45 or so should do the trick. There's your targets right there. Morgan Stanley right on the trend line now. Goldman Sachs right on this uptrend line, comes off the September 11th lows, and then you have a secondary uptrend line right here. This one comes off the October 2023 lows. SPGI, this is S&P Global, broke down yesterday. That's a sell signal, but it hit my BOD, or benefit of the doubt, for support level 477.30. It was support here for a while, and so once that goes, it should be lights out. There is a downtrend line that if it pops above, it may trigger and likely a back test, or maybe a run back up here to this resistance. BLK, BlackRock, broke this minor trend line here, needs to break this 960 level. I just had price alert go. I'm going to digress for a second. Click on this price alert that just fired on Monster and take a look. There's MicroStrategy. I was thinking Monster beverage. MicroStrategy. So watch this one. It's, when I get the price alert, I look, right now it's intraday. We could still stick save on there. But if you get a solid close below there, here's your first target. MicroStrategy is going to drop down to 178-ish. That's going to be about a 22% drop. If it falls below there, which I bet it will, ultimately, it's going to go to the bottom of the range. That'll be a 52% drop, and that'll be a great place to cover that short. You have both uptrend line support, long-term uptrend line, and a hell of a support zone. This was a trading range here. This is a breakout of the trading range. Break of that trend line is going to back test it. Probably step in and buy there, and then I think it'll go down there if that, especially if 178 goes. Okay, back to the financials. XLF, where was I? I had hit this one already. American Express, I already covered. Morgan Stanley, Goldman, CCA, BlackRock. I think I was on this one. Progressive just cracked this little support level here. It's back testing from below 246. Probably headed to this trend line. Then a break of that trend line will trigger even more powerful sell signal. Schwab, Charles Schwab has been in a downtrend. This is the primary downtrend line. Any push up to that trend line would be an objective entry. Any breakout above it, you could go long. It's coming off a divergent low recently, but kind of a messy sideways-ish chart. Not one of my favorites, but I just wanted to point those levels out. KKR, private equity company, it just broke down recently. It's not impulsive yet because it's waiting for the sector. Birds of a feather flock together. If I have time at the end, I'll show you there's an ETF for the private equity sector. Citigroup, not much to say. It peaked back here with a divergent high, went down, hit that target right there, 54.55, bounced, broke this minor trend line recently. It's still off that divergent high. Not a very clear chart, but kind of trading in this range. Ultimately, if the financials and Citi can do that, that's going to be bullish. If they break to the downside of this range here, that's going to be bearish. BX, BlackRock, another private equity asset manager, actually, I guess we lump it in either category. There's an uptrend line right there, and 160.79. This is where you need to break to trigger a sell signal. About 160 and the trend line. And that would take you down to this next uptrend line, and then 133.71 and this intersecting uptrend line. So that's a total drop of about 21% if hit. Fiserv, there's an uptrend line right there. Potential, it's not valid yet, but a potential secondary trend line right there. This thing looks also kind of toppy to me. Not one of my favorites, but just there's a trend line in which to trigger an objective short entry. CB, Chubb, insurance company, property and casualty. Very nice uptrend line. It's on right now. In fact, I got a price alert on this one today. Waiting to see a solid close below that trend line. Look how beautiful that is. Comes off the mid, or late June 2023 lows. Got a lot of clean reactions on it. Big divergent high. I don't see this thing doing much until at least at 260 levels or come back. The 200-day moving averages are just above it. So look for that one it's starting to break down right now. But again, you have to squint to see it. You can give it the benefit of the doubt. Today's Friday. You could take a starter and, next week, if it goes back up in there, you can either just cover that little starter position, or if it goes down, you can add to it or give it a little bit of room. But again, you want to be short below the trend line. You don't want to be short above the trend line. You can, set your stop not too far above, because, TA 101 says you can buy a trend line. It's been bouncing off the trend line and may bounce again. So again, short of here, partial position at most right now because it's so close and it's Friday, and then wait to see next week to either add or subtract, meaning close that position out. MMC breakdown already. This is so many similar, nice, clean, well-defined trend lines that come off the 2023 or 2022 lows. Price support just below. So remember, it's those check boxes, guys. I'm going over about 3 dozen here. And if you have the majority of these, give you these check boxes by breaking these support levels. I mean, a lot of them have already broken down the initial, but I'm not seeing impulsive selling yet. And that tells me that we need to see these secondary, those that haven't, for example, this one broke the trend line, but needs to really take this 216 level out to convince the longs that it's time to exit that and to get the short sellers who are all henpecked right now to get engaged back in this market. I know the short sellers are MIA because nobody's, the volume's dried up. It means shorts are afraid to short, longs aren't buying, but the market will go up just, without any resistance, kind of like what's Newton's second law? What's that? A body of motion will stay in motion until unless acted upon by an equal but opposite force. ICE, that's International Intercontinental Exchange. Beautiful, beautiful wedge. I covered this one recently. Breakdown, nothing but red sticks so far. That's what happened on earnings on that one. You can see my targets there. I've already covered this one, I believe, in recent videos. MCO, Moody's. This is a big one here too. Bond insurer and everything else. You have they rate bonds. There you have a nice support level, about 458 right there. Divergent, coming off a divergent high. You've got your 200s here. They tend to buy the 200s, but I think this one first, obviously it can be a first target for you. I expect a minor reaction in there. I'll even give you a line. There's some price support there. But that would be T1, 430, and then 405.88 is my what I call minimum preferred target, meaning not just my minimum target, but my current preferred swing target. That's the right way to say it. And certainly the potential for more if things get going to the downside. CME, another big exchange like ICE, just starting to crack today. You can see that. Again, it's Friday, so maybe most a starter, or you can hold off to next week. There's always a possibility you gap down on Monday, or you could gap up. That's the thing about taking swing trades on a Friday. You've got the couple extra days of overnight risk. And I'm going to put a line right here because that was also our previous highs right here. A couple highs. And so either way, pretty much below today's lows is where I'd wait to take a short on that one. AON, another insurance. This is an insurance broker. Nice cleanup trend line plus price support in which to trigger a sell signal. You see what's going on here? This looks very toppy. A lot of these stocks look to have peaked on earnings because I can tell this isn't good. They're not going to report till February, so this must have been an earnings gap and nothing but fading. This is what's going on. This is indicative of a very toppy market. Remember what I said earlier, there's a saying in the markets that it's always darkest before dawn. Think back to March of 2009 during the global financial crisis when the market bottomed. It looked like the world was going to come to an end and stocks would never stop falling, and then one day they just did. So just like it's always darkest before the dawn, it's always, I like to say the inverse. It's always brightest before dusk, meaning a lot of companies will top on rosy and record earnings, and a lot of times at all-time or 52-week highs, but when you see this is institutional selling, that retail crowds, it's a handoff. Retail crowd buys the earnings beat or whatever it was, and then institutions use that to sell into it. Either way, it's just not a good sign when you see a lot of these big earnings pops being faded like this. But again, maybe just a buying opportunity. Maybe it got ahead of itself. All I can tell you is the only trade to be made right now in this one, if you must make a trade, is to go long with a stop below because it's a pullback to support, dual support. My preference, wait for a sell signal there. Just take these great alerts. Why do I keep creating a parallel trend line? It's been a long week. Set alert. There we go. PayPal. This was a trade idea I gave to you. Gosh, where do we go? How long? I can't remember the last one, honestly. But this was a first target here. I gave you 3 targets. Was it after this breakout back test? No, it might have been above here. Either way, it put in a divergent high recently, which is not so bueno for the trade. Negative divergence right there. But it has pulled back to support. We have support right here. So at this point, if you're in this one still, stop loss not far below 76.05. It could still power up. And look, if these things don't break down, I keep talking about key levels to watch and levels that I think are probably going to break. But until they break, they might not. The market's been doing this for a while. It comes, kind of pushes the envelope, stares over the edge into the abyss, but then boom, just powers back up again. So if that happens, and look, all I can tell you again, this is an objective long entry here. I don't like it so much because of that divergent high. However, it's still a trade, and it's at support now. So maybe that's all you're going to get in a bull trend. Remember, this thing put a nice bottom in back here. The case was made, the stock bottomed. So it could certainly still continue on up, especially if the market and the financial sector does. That's the takeaway, guys. This one did kind of, not all birds of a feather flock together. This is in the financial sector, but PayPal is kind of its own thing. It's not the same as a bank. It's not, it's not an insurance company. And while the financials are going up, this one went down. So it is possible for this trade to play out and XLF and most of the financials to drop. It's just unlikely. More likely the stock peaked here, It's in a bear market, and it's going to resume that bear market. So don't fall in love with it. Just, that's what stops are for. USB divergent high. There's your trend line right there. It needs to break. It's going to be a powerful sell signal. Remember, a lot of stocks as a whole have peaked. Time permitting, I'm going to show you something on that I meant to cover. It's on my breadth indicators. Percentage of stocks trading above or below their 200-day moving averages. I've shared that one in the past, but let me just finish these financials here. So that was it. Peaked with that divergent high, and that was the last time I had comparable divergence, negative divergence on the daily chart, and USB fell 57%. It's been rallying. It's a regional bank, like a lot of the regionals. I'm just going to digress here for a second because I covered this many times. The regional banks, they all went effectively bust. The Fed bailed them, backstopped them, allowed them to take all those bad bonds that were horrible losses, their long-term bonds, and the Fed said you can, give them to us at par. So they're still, those bonds. You can just look at where interest rates are. Remember, this is what killed, and we had, 3 of the 4 largest bank failures in history just last year. And that was this. This is TYX, the 30-year bond. You can look at the 10-year, same thing. Bond yields went up. The value of those bonds went inversely, and that's where banks are putting their reserves in. And so how are they that much better off today? So I think, again, you can only backstop them for so long. They become zombie banks. And so everybody and their brother thought rates would be going back down, especially when the Fed cut 50 basis points, but we went the other way. Look, again, I maintain we're at that downtrend line I was targeting. So we're probably going to get, most likely, an abatement in yields, a pullback in yields, and a rally in bonds. But God forbid this breaks out, all hell is going to break loose in the stock market. So there's TYX and there's TNX, also at the downtrend line. Again, the 10-year Treasury bond yield. Most likely we're going to get a pullback soon in yields, at least a minor pullback, maybe more. But if not, it's going to wreak havoc in the financial stocks, particularly the regional banks. Alrighty, we're almost done. Back to where I was. I was all the way down to USB. All right, a couple more. I'm going to stop when I get to NASDAQ. PNC, look at that beautiful, beautiful bullish falling wedge. Oh my God. That was a big wedge right there. There was your breakdown. It came right there. And if you took that short trade and held it to the bottom until you got the divergent low, you almost doubled your money. It was a 46% drop. And then you had a divergent low. Divergence is not a buy signal, but it's time to start getting out of your shorts. But what is a buy signal? A breakout of not only a beautiful downtrend line, aka bullish falling wedge, but also a move back above. See the beautiful 200-day moving averages. Took them out there, put you in a bear trend. All you had to do is keep shorting rallies back to the 200s and then buy the breakout above the 200s and make sure that if you didn't already cover your shorts, which you should have, that you're out. And then you go long and then you buy pullbacks to the 200-day moving averages, right? We've come full circle. This is the same, almost identical pattern. Divergent high, negative divergence, bullish, bearish rising wedge, and a breakdown of that trend line will trigger a sell signal. Oh, by the way, I have this trend line here. That comes off the low. This is a minor, smaller trend line. That would get you in first. This one would take you down to the first, to the next trend line. Then the next sell signal would come on a break below that trend line. Almost done. COF, Capital One, Financial. The divergence is just getting bigger and bigger. Markets ignoring these developments. But again, divergences aren't sell signals. What's a sell signal? A break of an uptrend line right there. AFL, AFLAC, the one with the duck, divergent high, trend line break, and it's at support right now. Break of pretty much a break of yesterday's lows. Takes this stock all the way down here to the uptrend line, which is going to be a drop of another 12% or so. AGJ, Arthur Gallagher, already broke down, put in a divergent high. You had a sell signal here on that little wedge break right there and back test. Secondary sell signal there. You hit first target support, it bounced. back tested the secondary trend line, rejected, and back to that first support level right there, 275.21. Break of that's going to take you down here to 256.61, which means the stock's going to drop from where it's at right now, if hit, another 9%. And again, that's just the next target. There's certainly the potential for more. We'll just have to take it step by step. Met already broke down. TFC, Truist, put a trend line right there. It needs to break. Travelers, another insurance company, big pop after earnings and nothing but fade. A big fade so far. 243 is your first support, then the trend line there. Let's see. How many more do I have to cover here? Okay, just over another half dozen. We're almost there. BX or BK, Bank of New York Mellon, right on the trend line now. Sell signal pending. It's going to take it down there. AMP, Ameriprise Financial, broke down this minor trend line, hit the secondary trend line, bounced back, tested. So now it needs to take out this trend line here for the next sell signal. Coming off, I believe, a divergent high. AIG, American International Group. This is the one that caused all those problems back in the financial crisis. And there's a beautiful uptrend line in which to trigger. This already peaked here on that divergent high. It's been stair-stepping lower, but needs to take out the 200-day moving averages, which come in right above this trend line, and that's going to take that one down. FIS, Fidelity National Information Services. There's your trend line right there. And that one's getting quite stretched. ALL, Allstate, right on the trend line, just right now, ready to break. So that's why I'm doing this video, guys. There's a lot of these that are right on key support levels, ready to break. Yes, they do have also, most of them have these secondary support levels not too far below. So that'd be sell signal 1, and then that's kind of the all-in moment when these next levels right there. Why is that a good level? 177.63. It was an all-time high, multi-year high, maybe an all-time high. And then tried, finally breakout candle, big green candle, successfully back tested there. So that already back tested. It should be off to the races. Could do a second back test, but usually it's one back test and then you go. But with this divergent high, it's not going to go far. It's going to come here, test again, and ultimately it's going to break that. Then it's a failed breakout. Longs are all going to stop out here. All their stops will be hit. Short sellers will smell blood in the water. They'll pile in. But again, first things first. So let's set an alert. Wait for that to go. Oh yeah, I already had an alert go off here, but I'm going to pull this down a little bit now. Why did I do that? I want to capture the very bottom of that candle and just give it the benefit of the doubt, and I'll put an alert, right? So I put this trend line just below where we're at right now in case this one breaks next week, so I don't forget about it. Prudential, right on the trend line now, divergent high, ready to go. MSCI, right up on the trend line and price support. So that's it. And last one, NASDAQ. This one, NDAQ. You've got a beautiful looking bearish rising wedge pattern. Just ripe for the, and by the way, when I say beautiful, it's also very, when I say ripe for the breaking, bearish rising wedge patterns, typically when they break down, if it does break down, it's usually here within this about 70%, give or take, of the apex of the wedge, 70-80%. This is the apex when the lines come together. They usually don't break here. They usually break here. We're in the sweet spot. So that's it. Lot of setups for you. You can trade these individually or watch them collectively, set price alerts, and it will give you additional confidence to short or add to a short on the financial sector. And again, some of these, look better than others. You got your subsectors, life insurance and private equity. Private equity, I told you, is PSP. That's the one I said I'd give you. That's what it looks like there. And then the regional banks, KRE. KRE still has that beautiful little wedge pattern here. It's still in very close proximity to my resistance shorting zone here. But you got the big negative divergence building on it right now. And you just need to break the trend line there. And like I said, I already had a price alert on Fifth Third Bank today. FITB. I used to actually work for them as for their investment subsidiary, brokerage subsidiary, Fifth Third Securities, back in my former life as a stockbroker. But that one's going down here. I wouldn't jump the gun yet. I'd wait till next week. We're right on the trend line. My alert triggered today, but it's not, we're not clearly below it yet. That's it. But it's ripe. That's a bearish rising wedge, ripe for the breakdown. And yeah, you gain a little. There'll be, well, no, not really. I mean, yeah, I could give you minor targets, but that's my preferred and a minimum target. It's going to come down. I have a high degree of confidence that if this sector goes, meaning, because birds of a feather again, if the regionals roll over, which I do believe they will, not so far from now. And again, when is when the collectively when the majority of these or KRE breaks that trend line. That's the when. It could happen next week. It could happen 2 or 3 months from now. That's going to be a drop of better than 10% to that first target. It's going to take you down to right about $39 and the 200-day moving averages. It's been a while since this guy visited them. It took him back there when it was below the 200 days, and it needs to visit them at the very minimum. So that would be a nice quick 10%, 11% short trade, and you cover there. Again, we'll see what things look like if it even triggers a sell signal. I am going to wrap it up here, and I believe this will be the last one for the day. I don't think we're not going to see a lot more before the day is over. That's going to give us any clues to the market or anything. So yeah, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.